You could see here, since the bottom that we saw in 2022, which is right around the time that Bitcoin bottomed as well, Bitcoin is up about 350%. So it's still outperforming gold relative to both of their cycle bottoms, but gold is now up 228%. So to put in context how insane that move is, gold is a $36 trillion asset right now, right? A $36.5 trillion asset. It's about to be larger than the size of the entire US debt. So it's already larger than the size of the marketable US debt market. So we're talking about US treasuries, right? Bills, notes, and bonds, the investments that investors can invest in that are issued by the U.S. Treasury. But we're approaching the total size of U.S. debt. Just to give context as to how insane this move is, a 228% move in a single name stock that may be, $1 trillion, $2 trillion in market cap. It's not that wild, right? It's what Bitcoin has done. Obviously, Bitcoin went from a sub $500 billion asset to a $2 trillion asset over the course of 3 years. Gold has managed to go from roughly a $15 to $20 trillion asset to a $36 trillion asset in the span of less than 3 years here, or a little bit over 3 years. So that's how insane this move is. Now, a lot of people are wondering, why on earth is this happening? Well, I mean, obviously, number one, you have to think about what gold performs as historically, why investors buy this thing in the first place. And they buy gold as a debasement hedge, right? As a hedge against monetary inflation. But also, global central banks, why on earth would they buy gold? Well, you have to think about what's happening right now globally. We're witnessing this deglobalization, this trend away from an economy where the entire world is working with each other. We have free and open trade, to one where borders are more closed, trade is less open, and you see a nationalization of industry, or at least an attempt to nationalize industry. And so that's exactly what we're experiencing now. And amidst that, we're seeing this trend of de-dollarization. So China and Russia obviously have been de-dollarizing for quite some time. There's been talk of BRICS, right? This new gold-backed currency. That's not necessarily underway as fast as a lot of people would like it to. But one thing that is underway is, rather than purchasing U.S. treasuries for their reserve, they're allowing all of these large global central banks, these institutional allocators as well, they're allowing their U.S. treasuries to mature, even though we still are the world's largest sovereign debt market, and they're purchasing gold instead. So that's one of the main dynamics at play here. We're seeing this shuffling in the global order, where investors are moving away from the US dollar as their base layer reserve asset and toward gold as their base layer reserve asset. You layer on top of that the reality of the debt situation, not just here in the United States, where debt to GDP is around 120%, where we've been running persistent fiscal deficits, so spending more money than we're taking in for several years on end. And investors are positioning for just massive price inflation, right? In the United States, price inflation, officially reported by the CPI, has been above target at 2.7% for going on 3 years now. Since actually for going on 5 years now, right? Since price inflation began rising after COVID, when they injected the economy with all this money, we never have managed to break back down 2% after rising above it when inflation was on its way to 9.1%. That problem that we have in the United States is much worse elsewhere. China is facing a much larger debt crisis. They're facing a much larger inflationary crisis. And so basically all of these factors are coming to a head, and they've driven gold to absolutely insane heights over the last couple of months.
So it's just people realizing that fiat is dying, that the money dies. Like I think you mentioned it before we started recording. It reminds you of like when money dies.
Yeah, exactly. So if anybody has seen that chart of basically, during Weimar Germany, right? And this is a chart that gets cited a lot when Bitcoiners are talking about currency debasement. It was a chart that was in the Bitcoin Standard. Basically, it's this chart that shows the price of gold in German marks. And what had happened was, during this period of inflation that eventually led to hyperinflation, gold started going parabolic. So a parabola is essentially what you see here, right? An accelerating rate of growth on an asset priced in a denominator that's rapidly inflating away. Now, during Weimar Germany, obviously they experienced hyperinflation, and all of a sudden gold went from a few thousand marks to tens of thousands of marks to a few million marks to 10 million marks plus. And this was as the currency in Weimar Germany was rapidly being devalued. They were experiencing hyperinflation. Now, it's extremely difficult. This chart is in log scale, and the chart that I'm referencing was also in log scale. It's extremely difficult for any asset to go parabolic in log scale because the y-axis is exponential. This is a fantastic chart right here. You could see the percentage change in gold's price in red and the gold price at Weimar marks in black. Now, what you'll notice is the gap between 1 and 100, 100 and 10,000. All of these are 10x, right? Or 100x rather, right? So the jump from 100 to 10,000, that's 100x. The jump from 10,000 to 1 million, that's 100x. So on and so forth until in the upper limits, you see 10 billion and then 1 trillion, I believe. So ultimately, what this is showing is that you're not just getting a consistent linear devaluation in the underlying fiat currency, you're getting a rapid exponential devaluation in the underlying currency. And that's very similar to what we're witnessing now with the rise in gold. At every single turn, Robin, you mentioned it, $3,000 gold sounded insane. And then $4,000 gold sounded insane. And then all of a sudden, we thought that these rallies were over. Gold reached like $3,500. It pulled back. Gold reached $4,200. It pulled back. And then all of a sudden, here we are, just 3 months after gold hit $4,200. And now we're at $5,200, right? Adding several $1 trillion in market cap as the weeks go by. This is not healthy, right? This is an indication that investors are running for the exits. They're recognizing that the trend of debasement is accelerating, and they want to hedge themselves against that. Now, the good thing for you and I, Robin, is that we understand Bitcoin is a superior hedge against monetary debasement because of its monetary properties. Gold is relatively scarce, and so is silver, right? Seyfedina Moose writes about this in the Bitcoin Standard. Whenever you see a bubble in silver in particular, and this applies to gold as well, but any monetary metal whose supply schedule can change, whenever you see a rise in the silver price or any commodity price, what does that do to producers? They say, okay, it's going to be much more profitable for us to increase supply. We're going to get new mining equipment. We're going to go purchase new land. We're going to dig up more silver and more gold than we had previously, and that naturally depresses price. Bitcoin doesn't have that. Right. So while the market might not be coming around to that reality yet, while Bitcoin is still only trading at around $90,000, again, by the time this airs, that may be different. And the gold and silver price may also be different. You and I both know, and a lot of people in the know understand that Bitcoin right now is severely mispriced, because whereas gold and silver can have their issuance schedule increased because of a rise in price, Bitcoin cannot. There is no supply response function. It is a perfectly inelastic supply. And that's one of the amazing things about Bitcoin, that the move you see in gold right now will pale in comparison to the eventual move in Bitcoin if and when the market inevitably comes around to the way that Bitcoin should actually be traded, which is the world's best hedge against monetary debasement.
There's also an interesting data point. When I came into Bitcoin, we looked at when will Bitcoin flip gold. So what is the point? What is the price point for Bitcoin to reach the flip gold? And I remember roughly it was around 500 to 800K. I'm not sure like what exactly the point was. I just calculated the 36 trillion US dollar market cap of gold. That point is now 1.8 million US dollars. So it's like more than 2x, almost 2 million Bitcoin price that we just flip gold. What does that mean? The underlying currency that we're measuring both in, the US dollar, is just devalued at a rapid pace. And this is just, I'm in Bitcoin now 5-6 years. So this is like really rapid growth. Now I'm really thinking, when will Bitcoin actually flip gold? Like what price point? Like maybe it's 10 million because the US dollar is just faster and faster dying. I don't know. But if this continues like that, we obviously come close and closer to Bitcoin. By the way, I hear this thing is like, oh, gold is rallying up to Bitcoin. I'm like, no, like gold is catching up with Bitcoin a little bit what Bitcoin did in the last 15 years. And it's not even close. So I like those charts where you see like 15 years of Bitcoin growth. And then there's like this like 1 year where gold is getting a little bit of a headwind. So that's super interesting for me to look at, like when Bitcoin actually might flip gold.
Yeah, so a couple of thoughts there. And I didn't realize that we were already all the way up to $36.8 trillion yesterday. And it's airing in a couple of hours as we film this in January. I filmed a show with Joe Burnett from Strive, previously the director of Bitcoin strategy at Semler Scientific. And we were talking about how gold was a $35.8 trillion market cap. So in the last day and a half, it's added $1 trillion in market cap, which is just insane. And so when we talked about Bitcoin gold parity on yesterday's show, it was at 1.75. Now it's at $1.85 million per BTC. So the way you arrived at that was taking the gold market cap, which is $36.8 trillion, dividing by the current Bitcoin supply, which is roughly $20 million. And thankfully, over the next 114 years, it's going to stay at roughly $20 million, 20 million BTC. And then the last 1 million BTC will be mined over the course of the next 114 years. You divide the existing gold market cap by the current Bitcoin supply, $1.84 million. And you point out something really, really important, which is that just a couple of years ago, right, when gold was sitting at $2,000, Bitcoin gold parity was actually reached below $1 million, right? When gold was a sub $20 trillion asset, the eventual rise of Bitcoin, eventually meeting gold's market cap, which is what we call Bitcoin gold parity, or when Bitcoin catches up and takes over gold's size, was at $900,000. In just a few short years, that's risen to $1.8 million. And so if we factor both of these things together, number one, the exponential rise of gold, and number two, the eventual parity of Bitcoin and gold, then ultimately the price at which Bitcoin overtakes gold, which in my view and in your view and most of the viewers' opinions will inevitably happen, will just continue ratcheting higher, right? And so, for instance, when gold is a $10 trillion asset, when one individual ounce of gold is $10,000, then Bitcoin gold parity will be $3.6 million, right? When one individual ounce of gold is $20,000, if we get there as currency dies and more people continue trading gold as a debasement hedge, then the eventual Bitcoin gold parity will be over $7 million. And then eventually you get to $10 million per Bitcoin, which could be the point at which Bitcoin overtakes gold. If these two dynamics continue, number one, gold rising relative to Bitcoin, and then number two, Bitcoin ascending and adding market cap faster than gold, which is not where we are right now, then eventually the US dollar price at which we overtake gold will be exponentially higher than it is today, just as we've seen over the last couple of years. It's a startling development to see, but frankly, it's not one that I'm surprised about. Given what Bitcoiners have spoken about, what gold bugs have spoken about, ultimately, we're both on the exact same train, which is that currency debasement is a never-ending trend. It's something that you cannot stop. Every fiat currency eventually dies. We've just figured out different solutions for it, right?
What do you make with silver? I mean, gold is logical. People want to buy it. They trust it. It has a huge, it has a very long track record of doing what it's doing. What is going on with silver?
Yeah, so silver's a bit different. I'll share my screen here. This is a chart of silver, again, over the last 10 years. You could see that basically for 4 years straight, silver was roughly the same price, right? It was trading within this range from $18 to $30. And that's what people forget, right? They look at the last couple of years of gold performance and the last year or so of silver performance, and they say, well, look at they're trouncing Bitcoin. Bitcoin isn't doing anything. But if you think back, right, Bitcoin managed to go from $3,000 in 2020 all the way to $90,000 today, more than a 30x, right, which is much more than both gold or silver have done since that same period. But regardless, you take a look at what has happened to silver recently. Number one, it's a little bit of the same currency debasement dynamic at play, right? Silver obviously is a much lower market cap monetary metal. It also has a higher stock to flow ratio in that it's much easier to produce new units of silver than it is to produce new units of gold. And so over time, we have seen a couple of different silver bubbles, if you will. And those are much easier to reverse from a supply perspective than gold. Gold is much more difficult to find. That is why it's much more valuable than silver. If we talk about the monetary metals from the perspective of a stock to flow ratio, which is the amount of existing stock relative to the amount of new stock of the currency metal coming online, gold is superior in that sense. And so silver has this tendency to have these bubbles, but then they quickly deflate. So number one, it's that same currency debasement dynamic at play. Individuals are rushing into silver. It just so happens to be a much smaller market cap than gold. Right now, it's about a $6.5 trillion market cap compared to gold at $36.8 trillion, which by the time we air this show, it could be $40 trillion. And so a much smaller amount of capital has a much more outsized move on silver than it does for gold, right? So that's number one, the exact same currency debasement dynamic at play. Number two is there's this tremendous industrial demand for silver. You needed to build basically everything worthwhile, particularly computers and chips. And so this lines up with the trend of the boom in AI capital expenditure that we're seeing, not just here in the United States, but also in the West. Back in the 20th century, we had the Cold War. This race, this sort of nuclear arms race. We also had the war for between us and Russia, who would get to the moon first. Now in the 21st century, it's a little bit different. We're seeing a chip arms race, right? We want to be the manufacturing center for the world for these chips that are so relevant and so needed for AI, right? The rise of AI has been absolutely insane. A couple of years ago, we went from chatbots with ChatGPT that could barely do anything that's worthwhile to most recently Claudebot, which has now been renamed. I can't exactly remember what. These personal AI tools that people can build in their home. It's only becoming more relevant from a business perspective, from an individual perspective. And so the demand and the need, the industrial demand for silver is rising exponentially. And so that's driven the rise in silver as well. So you have currency debasement and industrial demand. And then the third factor, which not a lot of people are talking about, is China's very own debt crisis. So I alluded to at the start of the show, the crisis we're facing in the United States from a fiscal perspective is felt tenfold in other less developed nations who have a much smaller and less in-demand sovereign debt market than we do. So take China, for instance. Their debt crisis is much worse than it is here in the United States. Now, I won't claim to be an expert on it whatsoever, but that's one of the reasons you're also seeing a parabolic rise in silver. And then sort of playing into that is that China has had export controls on silver as well. Starting on January 1st, which coincidentally on the chart is sort of when you saw silver go from around $65 to $70 all the way up to $114 today. China put export controls on silver. So very strict export controls on the amount of silver that can exit the country. And so naturally, when you restrict supply of an asset, that's going to lead to a huge increase in price. The thing with silver and the thing with gold more broadly, but speaking specifically about this export control, is that this supply constraint being placed on silver is artificial. Right. Similarly, the supply constraint on silver is only limited by the amount of machinery and other physical capital that is being put into the ground to dredge up silver right now. And as I mentioned, when the price rises, and inevitably when this export control gets removed, that puts natural downward pressure on the silver price. So it all keeps coming back to Bitcoin, right? These export controls cannot be placed on BTC, but they can be placed on gold and silver, creating artificial upward pressure. So those are the 3/4 factors that are at play that's causing silver to have this monumental surge. But between both silver and gold, right, these supply constraints inevitably get removed, right? There was a stat that Joe and I were talking about yesterday. I think some 35 until about 100 years ago, only 35% of today's of the gold, the total gold supply was mined, right? And then over the last 100 years or the last 50 years, I can't exactly recall, the remaining 65% of the current gold supply has been mined. So for all of human history, right, up until about a century ago, we had only mined about 35% of the gold, and then 65% of today's supply was mined over the last century. So what does that tell you about the century that's still to come? Right? It tells you that gold supply is coming online at a much more rapid clip. So even though we have this tremendous debasement that's driving a rise in gold's price and a rise in silver's price too, the reality is that the technology to actually create new supply is increasing at such a rapid pace that chances are it very well may outweigh the function of the price going up because of dollar debasement. Again, Bitcoin doesn't have this problem, right? It has a predictable supply schedule. It has absolutely scarce monetary policy, whereas the same cannot be said for gold and silver. So that's what's going on with silver. I went on a bit of a tangent there toward the end, once again explaining why Bitcoin is superior. The market just hasn't caught onto it yet, but that's kind of where we are from a silver perspective.
This is a factor that I think not a lot of gold people realize. How drastic robotics, AI, space travel, and in general just deflationary technology will change how we can get to gold. And if the gold price rips to, let's say, 100K, there will be a lot of incentive, a lot of really, really great companies digging the gold up, developing robotics, developing AI to figure out where it is. Space travel is a huge thing where is there a huge amount of gold somewhere in the space that we can find somehow and get back to? I have no clue about the logistics of it, but I'm sure as we develop technology, we will have cheaper and better ways to actually get to the gold. With Bitcoin, that's just not the case. And even if it's not true, just the risk of that, I wouldn't I wouldn't bet my life on us not finding more gold on the ground or in space.
Yeah. So, speaking of that, a lot of viewers may not be aware, some may be, but there are asteroids out there that we can track, we can find that have more gold in them than our existing supply that's estimated to be on Earth. And so what happens when those companies the companies that are going for this can successfully land on an asteroid and mine gold out of it?
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.